It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Asian stocks slip as strong U.S. business data spurs bets on the Fed holding until at least December. The regional benchmark set for its first decline in 5 weeks. Bloomberg learns that Segantii faced $1 billion in redemption requests before deciding to shut the hedge fund down after an insider trading charge in Hong Kong. And we get the outlook for India's property sector, speaking exclusively with the country's biggest listed developer, DLF. Now let's do a check-in on markets and see how they're faring. Avril Hong is on top of developments in Avril. Stocks, bonds getting sold off. Swaps now factoring in a 25 basis point cut only in December.
Yeah, it is all about the Fed. And this is on a day where markets are digesting that U.S. services manufacturing PMIs, which surprised to the upside. They're dialing back those expectations of Fed rate cuts this year. Some even see it on hold for the rest of 2024. So it's risk off. No matter where you look in the region, the stocks are down. The Nikkei, which yesterday was leading declines, 1% off. We're seeing declines in the Kospi, TAIEX, Hang Seng. We're keeping an especially close eye on Chinese equities and geopolitical tensions amid China's drills around Taiwan. I'll talk a bit further about Japan in just a bit, but let's flip the board and take you to some of Asia's chip stocks. I just want to show you the extent of the risk aversion today. Not quite benefiting from NVIDIA's rally yesterday. TSMC down, SK Hynix flat. Samsung Electronics added pressure after Reuters report that its high bandwidth memory chips failed an NVIDIA test due to heat issues. Let's flip the board again, take a closer look at what we're seeing in Japan, because as I say, it is really the focus on the Fed today and how we've seen higher US yields that's prompting dollar-yen above the 157 level, approaching 157.52. That is the level which is thought to have last drawn the first of 2 interventions earlier this month. And it's also this Japanese currency depreciation drawing in these bets that we're going to see BOJ rate hikes that's bringing out the bond bears. The yield on the 10-year still sitting above the 1% level. And that is on the day that Japan CPI data showed cooling for a second straight month, Has.
That's right. And now the BOJ's meeting next month is probably live. Avril Hong, thank you. Let's get more on markets with our next guest, who sees 2 Fed rate cuts this year, starting in the 3rd quarter. Eli Lee is Chief Investment Strategist at Bank of Singapore and joins us here in the studio. Eli, we talk about a swaps market. Now, repricing, expecting a cut only in December. We've gone from 7 to 1. Perhaps, David Solomon of Goldman may be right. Maybe we could have none.
He could well be. But we are a little cautious about how fast expectations have been moving, and we wouldn't put too much weight behind it. I think if you look at the data, right, we tend to see inflation run a little harder in the first quarter of the year. That's not surprising. And we think that shelter disinflation will start to feature much more prominently for the rest of the year. And just a couple of weeks ago, the last CPI print, we did see some encouraging signs in that respect. And overall, we think that 2 cuts remains the most likely scenario.
The thing is, inflation has remained very sticky, not just in the U.S., but elsewhere. We heard from the RBNZ. We are also, being concerned and now pushing back their rate cuts possibly to the end of 2025. So it is a phenomenon amongst our banks right now.
Sure. I think that the resting heart rate for inflation is going to be higher than where we were before the pandemic. But let's not forget, inflation is now no longer at the heady levels above 5%. We are now between 2 to 4. And with inflation at this level, the Fed now has to turn its eye on the other part of its mandate, which is growth and the labor market. The labor market is still gradually easing. And Powell has said a few times now, if we see an unexpected deterioration in the labor market, he would be agreeable to cutting very quickly. And this means that we think the Fed would likely take a balanced approach. And in our view, that's a base case of 2 cuts.
So what does it mean in terms of your investment strategy? How does your playbook look like now? Is it any different from just months ago?
Right. We think that the proposition for equities now is far stronger versus bonds. We moved our 10-year forecast, the 10-year yield forecast from 3.25 to 3.75. I think you've pointed out that inflation is likely to be stickier, growth is likely to be higher. Fairly subdued prospects for very deep rate cuts at this point in time. But on the flip side, growth is likely to be strong. Inflation is actually fairly healthy in the sense that companies have pricing power now. And the earnings outlook, we think, is going to buoy the equities market.
So overweight equities, but where in equities? If you take a look at what Druckenmiller did before the results came out for NVIDIA, he started selling down his stakes in NVIDIA. Would you be doing the same? Would Mag 7 still drive this rally going forward?
I think that's interesting because, historically, when you see bull markets reach this stage, it tends to broaden out, right? So I think that smaller cap companies would look interesting as we mature, as the bull market matures. And, there's going to be, some near-term setbacks in the course of this multi-year bull market. We could well see some weakness over the next few months. But by and large, if there is no earnings recession, the bull market is likely to remain intact.
Chip stocks, AI theme, is that intact?
Yes, we think that theme is likely very real, but I think it's important for investors to be quite diversified. I think historically, when we see previous trends, the early leaders somehow tend to lose momentum over time. I think it is a relief that NVIDIA's results were strong yesterday. And it speaks to very strong demand from the cloud computing leaders, in our view.
It is interesting. I just want to show you this. Fascinating when you think about it. NVIDIA's market cap eclipsing countries like Australia, even Germany. I mean, what do you make of the prospects of NVIDIA going forward? Some say that, it is time to take money off the table. So much has been made already that you're just being greedy if you just keep at it.
Well, I think a diversified exposure to the AI theme would make much more sense. I think, like I said, I think historically it's very hard for an early leader to keep its competitive mode over an extended period of time. And, I think you mentioned, some market players diversify into other names. That probably would make some sense right now.
I want to move to Japan. Of course, the story there is about the week yen, 157 and change right now. Some people say that the next BOJ meeting next month is live. Do you expect any action from the BOJ?
I think it's live in the sense that we cannot rule out a hike at that meeting, but very likely we think that a hike should come much later in the year if it does. Now, this opportunity for Japan to kickstart its economy, to kickstart inflation again is very valuable. And so we think that the last, CPI number that just came this morning, that's going to help to relieve the pressure for a hike.
The thing is, how much pressure is the BOJ and Japan under, given the fact that metal prices have increased, and that adds to the cost of Japanese importers and companies? That may weigh on growth eventually.
You're absolutely right. So that's the other part of the equation, right? So a very weak yen does weigh on the economy too. You don't want cost-side inflation to come into the picture. That's actually going to hurt consumption and hurt growth as well. So, I think the BOJ is probably watching the U.S. inflation numbers as closely as everybody else is, because the yield differential is what really driving a yen weakness right now.
Probably watching it even closer. The yen remains attractive as a funding currency, especially among G10 countries.
Yes, we think so. Well, given our base case of 2 cuts, given our base case of still gradually declining inflation in the U.S., we think that the yen probably has some scope of appreciation.
We talk about the yen versus the dollar. How about the yen versus the yuan? How might that play out?
Well, that's very interesting, really, because we actually expect China on a relative basis, because of how much negative pessimism and negative expectations being baked in right now, that we could see actually positive economic surprises in China over the next 3 to 6 months that will likely buoy the renminbi versus the yen.
What kind of surprises are you hinting at?
Well, we think that given what's being priced in right now, the market is not really, thinking that there's very strong odds of China hitting its 5% growth. We think that that's likely to come. The central government is using its balance sheet to issue bonds right now, and moving the liquidity into the economy. That's a lot of dry powder, and we think they have a lot of moves to make if they need to.
So where do you play China? How do you play China? There's a sense out there that perhaps the worst may be over from the property sector. Yes, it needs more stimulus, but the worst could be over. We saw the news surrounding Wanda, for instance. There's greater interest in the stock right now. How are you looking at the property market and how that may guide your investment in China?
We think the game plan for fixing the property market is in place. The demand side, the supply side, buying over unsold inventory. They might not have done enough in terms of magnitude, but we don't rule them. We don't rule out them doing more if they need to. But essentially, I think the gist of the game plan is in place. And it's interesting. Usually at major bottoms of the market, bad news becomes good news, and good news is good news too. And we're sort of reaching that point where, recent negative news about EV tariffs from the US hasn't really affected China that much. Over the last few days, yes, we are seeing some profit taking, but by and large, I think the risk reward in China and Hong Kong markets are improving.
So would you be a buyer?
We are watching watching the market very closely.
Would you be a buyer of property?
Of property names?
Yes.
We think property names will perform well, but we think there are better plays out there in Hong Kong and Chinese markets.
What's the biggest risk for the markets right now? There's been so much uncertainty. All assumptions made early in the year are no longer valid. What keeps you up at night?
Oil price, right? So we've seen tensions in the Middle East sort of come and go. I think there's not so much attention on it now. But the fact is that the background risk remains fairly elevated. If we see tensions flare up again, and oil prices spiking, that could really, scatter the whole picture. Inflation is going to rise as well. Rates are going to stay elevated, and markets could react very negatively.
And how about gold? There's been a surprise surge in gold prices, and you're looking at 2,500 for the yellow metal. What would drive gold to that level?
That's very interesting because gold is breaking from the historical relationship with real rates, and this is all coming from real demand, physical demand. Central banks outside of US are buying, the PBOC, MAS, the GCC countries. Now, this trend is likely to be long term, and we think that's going to drive gold on a long term basis.
So this is gold being bought as a haven play.
There's some diversification away from US dollar-denominated asset from these central banks. But for investors as well, we think diversification makes a lot of sense. So the retail buying is likely starting to come in.
All right, Eli, gold at 2,500. Eli Lee, Bank of Singapore, we thank you so much for being with us today. Now, still ahead this hour, our exclusive conversation with India's biggest listed real estate developer, DLF. We'll discuss why they're expecting demand for luxury property to surge. But first, the latest on Hong Kong hedge fund Segantii's decision to shut down in the face of insider trading charges and $1 billion in redemption requests. Keep it here with us. This is Bloomberg. All right, Asian markets under pressure. That includes the Hang Seng as well as the CSI 300 index. In fact, Hong Kong stock extending losses into a fourth straight days. Traders tracking a sell-off on Wall Street fueled by worries the Fed will pull off, or rather put off, that rate cut as officials aim to get control of inflation. The Hang Seng down about 1% right now. CSI 300 index down 0.4%. Now, Bloomberg has learned that the Hong Kong-based hedge fund Segantii faced nearly $1 billion of withdrawal requests before its decision to shut down. The company is facing an insider trading investigation in the city. For more, let's bring in Bloomberg's Manuel Baigori. Manuel, what do we know? What are the details here?
Yes, Haslinda, it's an evolving situation, definitely very impactful here in the finance community in Hong Kong, a very well-known hedge fund in Asia and globally, particularly because they were able to carry out very complex block trades. So some of the investment banks loved this firm because they were able to help them, broker some of these transactions. So it's as you well said, it's a situation involving some insider trading charges. The case is with the courts at this point in time. And as we revealed in our reporting, the hedge fund was faced by about $1 billion in redemption from clients in the last few days, prior to its announcement that is winding down the firm. So it remains to be seen what the next steps will be, but definitely an interesting situation that has a broader impact in the community here in Hong Kong.
It is an abrupt end to Segantii, the hedge fund. What's likely to happen next?
Yeah, Haslinda, I mean, it remains to be seen how the banks that used to work with Segantii now, evolved in their direction, strategy, and find new ways to execute these block trades. I think the implications for the firm and the employees are still to be seen. I mean, the firm announced that they was shutting down, and obviously that will have a direct impact on the 140, roughly speaking, employees that the firm has, and then investors will have to see how their money is returned, right, in an orderly fashion. As the story that we're running now suggests, they were faced by $1 billion in redemptions, but obviously how and when that capital is returned to the investors remains to be seen. Segantii will try, I'm sure, to do it in an orderly manner so everybody can get access to the capital. But there is a big question mark around the future of the firm and also those involved in the insider trading allegations. So we'll see over the coming weeks and months how the whole case plays out.
Manuel, you also have to wonder if there's any broader impact from Segantii getting shut down.
Yeah, I think the impact, Haslinda, remains to be seen. I think it's definitely become the hottest topic among financiers here in the city and probably, broadly speaking, in the region because it was really a well-known name. They were working very closely with some of the major investment banks, helping them on particularly block trades, but also they were quite sizable, right? They were managing around $5 billion in assets. So definitely it will have an impact, but I'm sure other firms will try to grab market share and adapt as in any such situation in the past.
That's right. A well-known name with about 140 employees, Bloomberg's Manuel Baigori in Hong Kong. We thank you so much for your insights. Now, still ahead, leaders of China, Japan and South Korea are preparing to hold their first summit in nearly 5 years. We'll tell you what's on the agenda. This is Bloomberg.
Paul Jacobson assured me that when he takes the new Hummer EV on long journeys, it's not just fun to drive, it's equipped to go the distance.
I hear so much about road trip anxiety that I wanted to experience it myself. My family likes to drive a lot, so I brought my daughter home from college in this, and it was great. I mean, the computer system is all intuitive. It tells you how to keep track of the battery. It tells you where the charging stations are. It tells you how much power you'll have when you get to the charging station. So it really puts a lot of your anxiety at ease. But as far as driving it, it's a treat.
So where are you on the charging stations? I know General Motors has made an investment in one company. How are we doing in this country
country generally in getting charging stations in?
So I think this is an area where obviously we can continue to improve as a country and a society. We're doing our best. We've committed almost $1 billion to EV charging. So we've taken that and looked at home charging solutions, local community solutions, and road trip charging solutions. With my daughter, what we would end up doing is probably stopping, grabbing a bite to eat, plugging it into a charger, usually a high-speed charger, to get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing some of those anxious points for people.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back. Chinese Premier Li Qiang heads to Seoul this weekend for a summit with the leaders of Japan and South Korea, the first trilateral talks in about 5 years. For more, we're joined by our China correspondent, Min Lo. Min, what's on the agenda for these talks?
Yeah, look, these three countries, they haven't held a summit since 2019, so there is a lot to talk about. That summit had been halted partly because of the pandemic, but partly also because of resistance from Beijing due to these growing ties between Korea, Japan, and the U.S. But what's taken on increased urgency now for Beijing to meet with his counterparts in Korea and Japan is the fact that these countries, they have held their own trilateral summit in Camp David with the U.S. In August of last year, and that really set alarm bells ringing in Beijing because those three countries, they're pledging to increase cooperation on the economic and security front. So Premier Lee, he will be using this trip to really shore up China's security. And I'm talking about economic and military security because we know Washington has been courting Korea and Japan to expand those limitations on chip-making equipment exports to China. At a time when China already faces this wall of restrictions from the U.S., the Dutch, from the Japanese as well. Korea is now the largest supplier of chips to China. Japan, the largest supplier of silicon wafers to China. So a lot is at stake here as well for Korea and Japan because they have big companies, Samsung, SK Hynix, with presence in China. So they will be worried about retaliation from Beijing as well.
Min, you talk about military issues, North Korea. Put that in perspective for us. What's likely to come out of those discussions?
Yeah, it's not just North Korea. Security issues in the East China Sea, South China Sea, that's going to be in focus because, again, Korea, Japan, and the U.S., they have been strengthening their security mechanism. They've been holding joint drills in the East China Sea where China has disputed territorial claim with Japan over the Senkaku or Diaoyu Islands. Depending on who you speak to, they have different names for the islands. And then Taiwan also in focus because Japan just sent its largest delegation yet to the inauguration ceremony of President Lai Ching-te on Monday. Beijing obviously very angered by that. And then North Korea is that perennial issue of its nuclear missile program and now allegations of that weapons for aid exchange with Moscow that both Pyongyang and Moscow have denied. So Korea and Japan, they will be pushing for Beijing to use its leverage over Kim Jong-un to really rein Pyongyang's aggression in.
There's a lot of hope here, right? Korean officials expressing hope that perhaps this summit could be a turning point to fully restore three-way cooperation system. I'm just wondering, how likely is that?
Yeah, there is a lot of hope riding on this summit. But also over the last 4 years, you've seen really a lot of things change with Korea and Japan kind of inching closer towards the U.S. And there's been this almost fundamental shift in the geopolitical dynamics here because if you take a look at the trade number, China is still the largest trading partner for Korea and Japan. But if you look at the investments, new investment numbers, that's declined from both Korea and Japan in recent years and exports as well well. Korean export to the U.S. had overtaken its export to China for the first time in over 2 decades. So that's huge. So Beijing has a lot to navigate here in terms of the relationship. The good news is there seems to be intention from all sides to really stabilize relations. They're set to adopt a joint statement out of the summit detailing some of the outcomes. And we can look at perhaps increase in people-to-people's exchanges, as well as collaboration in science and tech in dealing with climate change and infectious diseases, and perhaps efforts to also bolster trade and investment as well.
Definitely a great starting point there. Bloomberg's China correspondent Min Min Lo, thank you so much for that. Now let's do a check on how Samsung shares are doing. Shares of Samsung declining as much as 2% earlier today, the most since April 25th. That's after Reuters reported that its latest HBM chips have yet to pass NVIDIA's tests, and that's due to heat and power consumption problems. Samsung currently down by more than 2.5% as we speak. We're also keeping an eye, by the way, on Chinese power stocks. They're jumping after Xi's meeting on deepening that reforms for some of the country's key sectors, including power, in a symposium. Take a look where we are in the China Power International, up by 2.8%. Jilin Electric Power surging more than 9%. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back to Bloomberg Markets Asia. China markets just heading to lunch. We have the CSI 300 index under pressure, currently down about 0.4%. Chinese stocks in the mainland as well as in Hong Kong under pressure. They are on course for a weekly underperformance relative to other EM peers. Investors betting that a rally in the $9.3 trillion market has run out of steam. Of course, some say that it is profit-taking as well. CSI 300 index down 0.4%. In terms of the yuan, trading at 724.53 as we speak. We've seen a recent sell-off. And of course, there's a lot of pressure from the Fed as well. Uncertainty on when that rate cut might come. Now, swaps market pricing a 25 BPS cut only in December. We have China going to lunch, Japan coming back from lunch break. Avril Hong on top of all that's happening there. Avril.
Yeah, Has, it's been quite a week for Japanese equities. I mean, we talked at the start about that material stock surge, along with the commodity prices rising. Then we got through NVIDIA earnings. And now, ultimately, at the end of the week, it's about the Fed and how that tick up in U.S. business activity, that acceleration is causing traders to pare back expectations of Fed rate cuts. So it's really risk-off in Japan today. The Nikkei, the topics, tech is not doing well. And we're also keeping an eye on the yield on the 10-year. It's still sitting above that 1% level. Very bearish among bond traders. Flip the board. Let's take a closer look at what we're seeing on dollar-yen, because amid those higher U.S. yields, we've seen it popping above the 157 level. Remember, 157.52 is what's thought to be the level which last drew a first of 2 interventions from the Japanese authorities earlier this month. And that is what we're really keeping an eye on, though there are some market participants who think that the Japanese authorities might face some resistance in intervening this time around. It might not be so straightforward, because we did get the U.S. Treasury Secretary not so long ago voicing discomfort about government intervention in currency markets. So that is among the things that we have to keep an eye on. Flip the board again and take a look at what we're seeing on Japan inflation. We did get those CPI numbers showing the cooling for the second straight month, but the CPI, the core number, that is at 2.2%, still well above the BOJ's 2% target. Has.
All right, let's dig deeper. For more on Japan's cooling inflation and the yen, let's bring in our Asia economy and government senior editor Brian Fowler in Tokyo. Brian, inflation cooling for a second month. How are we reading into it, and how is the BOJ likely to respond?
Yeah, I think there are two ways to look at today's figures. On the downside, you can say, okay, the main gauge slowed for a second straight month. And drilling down into the figures, the service price inflation slowed below 1.7%. So that kind of hints at some weakness in the underlying trend. On the other hand, at 2.2%, the main gauge has now been at or above the BOJ's 2% target for 25 straight months. And on top of that, there are at least three factors that could point to rising upward pressure on prices in coming months. Those are the wage hikes that we saw agreed upon in March. Those will start to kick in a couple of months. Those are the biggest wage hikes in more than 3 decades. We also have the weak yen. That could put a minuscule upward pressure on prices through imports. And then we also have utility subsidies. Utility subsidies took about half a point off the headline CPI figure in the latest data. Those subsidies will be phased out starting in May. Not sure if we'll see that impact right away because May is not exactly the hottest month, so people don't necessarily need to turn on their air conditioners. But we will definitely start to see that impact hit in June and July.
Brian, what might that mean for the BOJ? Will it derail the BOJ from rolling back its easing policy?
Everything we see now, and there's a mixed bag of opinions out in the world of economists, but most people are expecting the BOJ to stay on track towards normalizing policy with at least another hike. As many as 2 or even 3 in some people, in some parts of the industry are saying as many as 3 hikes this year. So at this point, we had Ueda speaking. Governor Ueda is in Italy right now for the G7 meeting, and he was asked about some signs of weakness in the economy in the first quarter, and he said, the GDP figures don't change the picture. Japan's economy continues to recover. So rather an upbeat message, which implies that he still looks to hike interest rates at the next opportunity.
And of course, we've been talking about the weak yen, 157 and change, and some say, you know what, the next BOJ meeting is a live one. What are you hearing? Can we expect intervention to support the currency because it is impacting companies with their import costs?
Yeah, so it's an interesting problem for Japan. I mean, traditionally, Japan kind of liked a weak yen because it helped exporters, and it has helped exporters this year. On the other hand, a growing number of companies, more than 60%, say that on balance it's actually a problem because they are having trouble passing on the cost of rising materials, imported materials onto customers. So it's not a good thing for Japan overall. We've seen Governor Ueda change his tone a little bit. He, a couple months ago, he sounded a little bit sanguine about the yen. He didn't seem to be all that worried, but last month he's cited the problems. I'm sorry, earlier this month he cited that the problems of the yen, and saying it's looking to be it's making things difficult for businesses to make their business plans, and it's also hitting households. So it's definitely a factor that makes June a live month. Economists, most of them are saying it's probably going to be more like July before they move, but June is definitely going to be a live event.
Definitely, we're back talking about intervention. Brian, thank you so much for that. Our Asia Economy and Government Senior Editor, Brian Fowler in Tokyo. Now, let's pivot to cryptocurrencies. The U.S. SEC has approved proposals from key venues to list products tied to Ether, paving the way for eventual listings of spot Ether ETFs. And Hong Kong is now set to be considering allowing staking for exchange-traded funds investing directly in Ether. Let's get more details with our Senior Crypto Editor in Asia, Ryan Weeks. Ryan, what are the differences between the spot Ether ETFs in Hong Kong and the proposed products in the US?
So it's important to state that the US Ether ETFs are not yet live, but there is considerable optimism around an approval now. And that began on Monday of this week after the issuers of these proposed products removed plans for staking services from their proposals, seemingly to appease US regulators. That optimism grew further yesterday after a listing proposal from NYSE, SIBO and NASDAQ was also approved by the SEC. But we still need a separate approval for the issuers before anything actually goes live. Whereas what you're seeing in Hong Kong is that issuers are now in discussions with regulators about potentially adding staking services to the products that they already have live and that have been live for a couple of weeks.
Talk to us about staking services. Why do people care about whether or not these ETFs offer staking services?
So by staking Ether to the Ethereum network, issuers could potentially earn rewards for helping to validate transactions. And those rewards could be equal to about 4% per annum, perhaps. And issuers could pass that back to investors in the products in the form of passive income. So in Hong Kong, that could help to boost the appeal of these products because they've had a fairly lukewarm reception so far, just a couple of weeks removed from launch. In the US, it's quite different. So staking is a bit of a hot button issue in the debate around whether or not Ether should be considered a security. So actually last year, the SEC accused Coinbase, the crypto exchange, of breaching its rules exactly because it was offering staking services through the platform.
And Ryan, what is the size of the opportunity for Ether ETF issuers?
So it's too early to tell right now, but I think analysts expect that it will be significantly smaller than the, say, $58 billion in assets that the Bitcoin spot ETF issuers have already amassed in the US just a few months removed from launch. And that's because Bitcoin is just far better known as an asset among the investing public. But it is too early to tell. You know, the products are not even approved yet in the US, and they've only been trading for a couple of weeks in Hong Kong. So it'll be some time before we can really gauge how successful those launches have been.
Ryan, thank you so much for that. Our senior crypto editor in Asia, Ryan Weeks. Now, still ahead, property developer DLF expects demand in India's residential real estate sector to remain strong. The chief business officer will be joining us for an exclusive interview. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching India Focus. India starts trading in about 4 minutes and futures pointing to a lower open, pretty much in line with the rest of the region. Sensex index down about 0.1%. But bear in mind that we've seen momentum for Indian stocks. That's been pretty strong as we head to the results of the election. Investor sentiment has been pretty much dominating everything. And on Thursday, the Nifty 50 index broke out of a probable double bottom pattern. Today, though, pointing to a lower session in line with the rest of the region. 50 futures down about 0.2%. Now, let's stay with India. DLF is India's biggest publicly traded real estate developer. It's best known for developing Gurgaon, roughly 30 kilometers southwest of New Delhi. DLF is now testing Mumbai's market for luxury condominiums with a project in the city. Well, joining us exclusively now is DLF Homes joint MD and Chief Business Officer Akash Ori. Akash, good to have you with us. We talk about how hot the market is. How long will it stay hot, though?
Thanks for having me on the show, Haslinda. Markets are pretty hot in India today. The annual turnover of sales last year have been almost about 7 billion, so it's been pretty good. And I think what is happening is the trend is that the new India, which is the young India, is coming into investing in real estate in a big way. And that trend, I feel, is going to keep it long. Also, what is happening is that people are wanting better and bigger homes. They are wanting more plusher homes. And post-COVID, I think what people have realized is that they want to be, since life is finite, and they want to live it up. And I think real estate has also become, the residential real estate also has become a priority. So it's no more something that they can put off.
Akash, we're talking about million-dollar homes. What's the risk that we could reach a saturation point?
So as I said, you know, what's happening is $1 million homes are just the beginning of what you're seeing actually in India. We have also done about almost 15 million homes, which are apartments in the Camellias, which is in the golf links of DLF in Gurgaon. So I think what's happening right now is that, as I said earlier, the young India and people are wanting better homes. They want to live in better homes and bigger homes. And I think this is a priority. And with the economy booming, with India making all the marks as far as the growth potential is concerned, the real estate investments are growing, the inward remittances are growing. What is heartening also to know that the NRI investments have grown almost 3 times. They're almost 25% of our top line today. So I think the saturation point can only be limited to many geographies. But if you look at it as one India, if you look at it as a global perspective and the massive NRI investments that are coming into the country today, I think there is enough market for everybody.
So how are you capitalizing on the growth you're anticipating? Akash, I mean, what are your hiring plans, for instance, for DLF? What's your investment plan?
Well, as far as DLF is concerned, as we mentioned to you that our developable potential this year is almost about $4 billion US dollars. The sales potential is almost $2.5 billion US dollars. We are entering Mumbai and Goa, apart from our hub, which is Gurugram. And so we've got Tri-City, which is in up north again in Chandigarh. So there is a lot of investments that we are doing this year, and the sales potential is also looking good. Investments are looking good. We have just closed a quarter with almost about $250 million. So I think as far as we are concerned, we are setting the whole business, especially the construction as well as sales revenue engines, and then making sure that they are tightly controlled and focused.
And in terms of commercial real estate, Akash, how is it looking and what's the potential there? What opportunities do you see?
Well, our commercial portfolios have also been pretty good. As you've seen from the results, the annuity business is doing very well. This whole concept of a hybrid model where in India it's completely different. Most organizations prefer employees to work from the offices, which is good. And that is leading to an increase in the revenue as well as the annual rentals as well. So the commercial business, the office business is looking good too. So all I can say is today, both DLF's engines, both the development business and the Rentco businesses are doing pretty well.
Akash, given the rosy picture that you're looking at, any plans to go to market?
Well, right now, we're already there. If you're referring to REITs and other markets and all, not at the moment. I think as far as we're concerned, we will wait that out for a bit. But looking at the kind of growth potentials that we have today, there is a lot happening in India. A lot of companies are coming to India, and a lot of investments, in fact, are coming in, as I mentioned earlier. So whether it is the domestic demand or the demand from the non-resident Indians all over the world, they are looking at India today.
Akash, we're counting down to the results of the national elections. I'm wondering, what policies would you like to see from the Modi government when it wins that election?
Well, as far as we are concerned, I think the real estate industry is going to be contributing to almost 13% of the Indian economy in 2025. So the government has been pretty proactive already. Regulations are in place. The banking systems are pretty robust and tight. So I think as far as the support is concerned, there is enough that the industry has today. And I think we're on our way to a lot of things. I mean, I say this with caution again. All the planning is done with a perspective of future development. And we're keeping our eyes to the ground and making sure that we take one step at a day and also make sure that the visibility for the next 3 years is planned well. So as far as the government is concerned, I feel there is enough potential that this industry brings, whether it's employment, whether it's adding to the economy. So as far as we're concerned, the government is supportive, and I think everybody is cognizant of the fact that it is going to be a major contributor to the economy in the next 3 years.
Akash, it is a higher for longer environment. Rates are likely to stay high for quite some time. How might that play out in terms of the property sector?
Well, as far as the, are you talking about the investments? Are you talking about residential property rates?
Residential property rates?
Yeah. So what is happening is, as I said, I think it's more of a priority than anything else today. So if people are wanting to, buy better homes, like they've always done with watches or travel in business class or buy, expensive clothes or whatever else, I think residential real estate has now become a priority for them. So I feel that they are putting away that money on a regular basis, and it's become a priority one. So therefore, for them, this is something that they spend a lot of time. A home is where you rejuvenate, it calms you, gets you ready for the next day. So I think what people are doing right now is prioritizing it, and I see that once you do that, I think you generally get money from wherever you need to. But I think that's where it is, and I see this as a trend. This is not an aberration. I've been seeing this for the last 4 years, and I hope that this is going to continue. There are no signs for it not to. The builders and the industry is also making sure that they are providing for this demand.
Akash, thank you so much for that. Akash Ori of DLF Homes. Just something to alert you to. Japan's 10-year bond yield surging beyond 1%, currently touching 1.005%. This is the highest level since 2012. And that's as investors fully price in a 10 basis point hike at the July meeting. Again, Japan 10-year yields rising, breaching that 1% level, the highest since 2012. Now, India's biggest airline, IndiGo, planning to launch a new premium product to attract first-time business flyers. CEO Peter Albers told us about the low-cost carrier's ambitions to move beyond its no-frills offerings after posting a profit beat in its latest quarter.
The basis of what IndiGo is today will not change. But on that selected set of routes, we introduced this new product. Again, the nation's busiest and business type of routes. And we know for a fact that not all cities in India are today developing in the exact same way. So it's going to be domestic only. I can share that with you. It's going to be domestic only. And in the first part of August, we'll further share details on what routes precisely, on when precisely, what is the exact configuration. And it will be live. It will be operational before the end of the year.
Great. Does this at all confuse your positioning, Peter? I get the market reason for why you're introducing a business class.
No, it's a very fair question. And I would say, on the contrary, it reinforces our position. Our position today already has the opportunity to, have more space in the aircraft. And we have seen a growing need. And if you take some of the nation's busiest routes, there's so much demand in this space that we felt it was absolutely the right moment to also, in addition to the product we're having, to also start catering for these needs of the Indian consumers. And we see more and more corporate travelers who wish to have that product, and they fly with us all over the country. They fly with us on those specific routes more frequently, and therefore we felt this was actually reinforcing our proposition and our image in the market and our offering to our consumers rather than confusing.
How does this change profitability over the mid to long period? Have you modeled that out?
You can rest assured that the steps IndiGo is taking, all our strategic moves, be it going international, be it some of our co-share relationships, which we start, be it the wide body fleet order. And the same would go for this proposition, that it is based on a solid financial analysis.
And that was IndiGo CEO Peter Albers speaking with Bloomberg's Maneka Doshi. Plenty more ahead. Keep it here with us. This is Bloomberg. Well, here's a Bloomberg scoop. PAG, the private equity firm, is considering buying Dalian Wanda Group's shopping mall properties, and that's according to people familiar with the matter. We're talking about nearly 500 shopping malls here. PAG could raise a fund and bring in other investors for a transaction that may value the real estate assets at as much as 100 billion yuan. That's $13.8 billion. And of course, once again, PAG said to be considering buying Wanda's nearly 500 shopping malls. Now, let's take you to markets and take a look at where we are in terms of how the indexes are performing right now. Asia pretty much tracking Wall Street lower after the US PMI came in stronger than anticipated. That suggests the Fed may keep rates on hold for most of the year. That is it. From Bloomberg Markets Asia, Horizons Middle East and Africa is next. This is Bloomberg.